Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
A software company and specialty retailer are topping this week's list. Joining me to provide details, Ryan McQueenie and Brian Bolin, who's on the remote with us. Brian, we're going to start with you. You have the software company, Adobe Systems.
Right, Adobe Systems, and that's ADBE is the ticker. It is just a Zacks rank 3, and that's a hold. Normally looking for a little bit better Zacks rank when we do these videos, but I want to do this one because it reports later this week, as you can see. So it reports on December 13th, which is going to be, what, Thursday, I think, Terry? Is that day?
I believe so.
Okay.
After the close, right?
After the close, yeah, it's one of these tech companies, West Coast, so yeah, definitely going to be after the close. It's got a good divergence here for growth and value. Tells me right away that I'm in a growth stock, so a good growth score, a low value score. That's something I like to see, but obviously this is a top stock pick, and I'm doing this because of the earnings. So if we just take a look at, what's been going on here, we see just a little move higher in earnings estimate, and this is after the most recent quarter. So a little trickle up here. So we had a bump here and a bump here, obviously a bump here from this quarter. But the annual estimate only moved at one time here. Next year, though, did see a double bump, double move right there. So that's kind of good. We like to see that. One of the ideas, though, that's the earnings estimates. If we look at the surprise history here, we can see that the Adobe does beat just a little bit, but a very consistent beater. Okay, so the consistency is key right here. The market likes consistency. So if we jump to the chart, we can see this is the real definition of consistency. Beat, 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 beat. So that sounds like 4 straight years of beats right there. All those beats, just beat it. Ryan McQueenie might not know that song. It's a Michael Jackson song, but it's a good one. So Adobe is always beating the number. The stock is obviously pulled in quite a bit here in this correction. This is a good, solid software name, if that's your thing. But that's my top stock pick for the week.
All right, Ryan, you have the specialty retailer, Restoration Hardware.
Yes, I do. So not quite a Bolin's blowouts, but definitely a blowout quarter last week reported for Restoration Hardware. Earnings of $1.73 per share, just crushed the Zacks consensus estimate of $1.27. That was up 66% year over year. That's the type of growth Brian Bolin likes to see as well. So definitely some good figures to look at. More from that report. Total revenue up 8%, comps up 4%. Comps, a 4% number in retail right now, pretty good for what we're seeing, but that's on top of 6% comps growth in the prior year quarter. I think with the comps figure, it's really important to think about what quarter you're comparing it to. When you see a 4% growth on top of a quarter last year where there was 6% growth, that's a trend that I think is really, really strong. In terms of outlook, management raised its Q4 revenue and earnings guidance. This is a really solid beat and raise quarter for RH, and perhaps most importantly, management reassured everyone they will not see a material impact from the Chinese tariffs next year. This was a big concern for a lot of these kind of home goods and furniture retailers throughout the year. As we're going to see in 1 second, we'll take a look at the chart. I think it helps explain a little bit of this whipsawing pattern we see on the chart. Okay. Before we jump in, though, I just wanted to mention that the extent of this beat in the uptrend that we're seeing in the earnings outlook is really making a value case for RH on top of that strong earnings growth I mentioned. Trading at just about 16.8 times earnings at yesterday's close. The median for the past year, and this is on forward 12-month basis, so this is looking ahead based off of the estimates. The median for the past year is 17.8. So you're getting this at a discount to what you've been able to get it at over the past year or so on average, and we just had that incredible quarter. so we know even more about the recent business trends. And I think that that value case has really been fortified over the last few days. Now, the chart, as I mentioned, we're zoomed quite a ways in here. Typically, when we look at the price consensus and EPS surprise chart on Zacks, we're looking at a 5-year view. I have it zoomed in to about a 2-year view, and that's because I just wanted to make the most recent trends here in 2018 a little bit more visible. What did we see happen? What was maybe our first indication that we'd see a nice response to this earnings report? Well, we saw the consensus for 2018 continue to eke a little bit higher, just inch higher for 2019, climbing steadily higher over the duration of the quarter. But at the stock, as I said, just whipsawing up and down. You know, there's a lot of market volatility in here, a lot of questions about the trade war. It makes sense to me why this is happening, but we always look for that divergence between the trend in the earnings outlook and the trend in the share price. When the stock is trending down, the earnings outlook is trending up, there's an opportunity there. As we can see, that opportunity came up big time. The stock has been climbing since its report. The earnings outlook has been climbing since its report. These earnings trends take a while to develop. I think we'll continue to see some positive revisions. We'll continue to see that outlook improve, and I think the stock is going to continue to mirror that, especially now that we know, one, that this company is not seeing a material impact from the tariffs, and two, that the broader market climate should be a little bit better. We're getting some reports today that we're moving ahead with the trade talks. Hopefully some of this is easing off as we head into the new year, and that should benefit just about everybody.
All right, do you own either of these two stocks?
I do not.
All right, Brian, you own either of these two?
I don't, but I wish I owned Restoration Hardware.
Hindsight is 20/20 vision, Brian.
Right?
And thank you both for that. Don't forget, always more stock information on our website, Zacks.com. Get on over to the homepage and check it all out with Ryan and Brian. I'm Terry Ruffalo.